Another thing that I want to touch on before I get into the analysis is I've had some questions about why do I do my analysis on the H4 time frame? Which kind of time frames should you be trading and looking at? What I normally would suggest to most retail traders, because you're trading part-time, you're not able to watch the charts all the time, is you should be looking at the sweet spot is at about 4-hour time frame. Because on a daily time frame, it's a bit too wide, it's a bit too spread out. Any trades that you get into, your stop losses might be a little bit too big, or you have a lot of waiting time for it to get to a tradable position, or you have a lot of waiting time for it to get to a take profit level. And with that bigger stop loss, you end up having to size down on your trades. So what happens is if you're trading on a longer time frame, you have smaller trade sizes, you have a lot of waiting time, and if it does hit your take profit level, you don't have as big a profit because you're waiting longer, you're having a smaller trading size. If you were to trade the smaller time frames, for example, the 15 minutes or the 1 minute, 15 minutes, or even the 1 hour time frame, what that requires is a lot more closer activity, closer management, because prices fluctuate a little bit more on the smaller time frame. You might get caught thinking that you're trading into the trend, but it might be a short counter trend view if you're looking at the smaller time frame. So for most retail traders, if you're doing this part-time, you're not able to monitor the markets all the time, I would say H4 is the perfect sweet spot for now, where you're able to do analysis, you're able to set your orders as to what I've done on the currency call here. I can tell you trigger levels, and then you can have take profit levels, stop loss levels, which are reasonable, and also targets that you can hit within the next couple of days. So that's one of the reasons why I look at H4 time frame. And then if you're looking at all the smaller time frames, that would most likely be when you're trading the news, or when you're able to sit there and scalp, closely manage your trades, and also to enter, watch it, get ready to close. So it really comes down to when you're trading, not one time frame fits everyone. It's all about your personality, it's all about your characteristics when you're trading, your risk profile, and also what you're comfortable with. Make sure you adjust your strategy, make sure you adjust your approach according to that.